And now you have arrived to the final entry model, the reversal. Let me just clarify upfront that these entry models, the 50-minute reversal entries, are the most dangerous entries and has the highest risk. So, what is a reversal? I'm starting everything like I usually do, showing you a structure on the 4-hour time frame. So here we have a nice bullish structure. Price is creating breakout structures over and over again. We have a sweep, we have a protected low point, and we have a break of the structure to the upside. So the point of reversal entries is that we are expecting that price will reverse back down to the 71 level in case of a bullish entry. Here on the 4-hour time frame, we have a beautiful bullish example where we pull the Fibonacci from the previous protected low point up to this retracement point, and we are expecting price to come back down to the 71 level. And now we are looking for 50-minute entries on this retracement, on this reversal. Once again, these are the most dangerous entries and has the lowest win rate out of all of the entries. Why? Because you are trying to trade against the trend. You are trying to trade against the higher time frame direction, and you have a clean bullish 4-hour structure in this case, and you are trying to short the 15-minute time frame. You are trying to take shorts on the 15-minute time frame, which is going against the 4-hour trend, the 4-hour flow, and in this case, this could be really dangerous if you don't do it properly. Still, if you do it properly with all the needed criteria system, with everything that I'm going to show you, it is still the most dangerous entry model. So I'm only recommending this entry model to those who have completely mastered the risk management, have self-confidence, have confidence in their trading system, and just ready to rumble on dangerous entries as well. But once again, I'm only recommending this entry model to you if you have mastered everything else besides of this one. So please do not jump onto this entry model every second or so. Just simply gather enough experience to finally be self-confident enough to take these entries. So now the theory, what we are looking for in these reversal entries. Once again, as I told you, we are looking for the expectation of price retracing back down to the 71 level, and from this region, price will continue up to the 0 level. So we can capitalize on that movement where price starts the retracement, because if it retraces, it will go back down to the 71 level. Okay, take a look at this, how we can utilize these retracements, these reversals into a trading plan. So first of all, we will have this type of structure lined out with blue arrows on the 50-minute time frame, leading up to a retracement point with a bullish 50-minute structure. Once price shifts the market structure from bullish to bearish, you are not jumping on the opportunity, you are not taking this trade. What you need instead of having one market structure shift is the market structure shift and the confirmed breakout structure again after the shifted market structure. So in this case of having a market structure shift on this line exactly, price shifted the structure from bullish to bearish with this movement. You are looking for another confirmed breakout structure to the downside here on this line. And in case of this 50-minute structure breaks the structure again, the 50-minute order flow leads to the downside and it's a confirmed bearish order flow now, you can start to look for this retracement reversal entries. Same principles applies as on all of the other entry models, but most importantly, the same principle applies as on the continuation entry model, because technically this is a continuation entry model, but with a twist that it's a reversal of the original 4-hour trend. Because yes, you are going to take continuations. You are going to take the continuation entry model all the way down to the 71 level. To be precise, not all the way down to the 71 level, but down to the 0.5 level into the discounted region. And this is where the premium and discount comes into the picture. Because what you are looking to do here is that you are trying to take this reversal continuation trades down to the 0.5 level maximum. And in this bullish structure, when price goes below the 0.5 level, you are not looking for these reversal trades anymore because that is dangerous. This is the premium region. Above this 0.5 level, this is where the premium is, which means that this asset, Euro AUD, for example, in this case, is way too overpriced to be bought there. So At this logic, you are looking for price to go below the premium level, below the 0.5 level, so it won't be overpriced anymore. It will be discounted, will be fairly priced, where buys will come into the place. So below the 0.5 level, you are not looking for trades. You are not looking for these reversal counter opportunities. Below the 0.5 level, the only stuff you are doing is that you are waiting for price to enter and arrive into the 0.71 destination. So, what you are looking for here, entry-wise. For example, let me just draw the structure for you. The price is coming up the same way, right? It's coming up to the retracement point and it retraces here. It decides to retrace here. You don't know where the retracement will be. It can be up here, it can be here, it can be even below. Somewhere price will retrace, we all know that. And when it retraces, it first breaks the structure, which means it shifts the market structure from from bullish to bearish. And in case of this event is happening, once again, you are looking for another break of structure, and the break of the structure has to happen on this 50-minute structural point, new structural point, which will be a lower low. So a new lower low has to be created. And now how you can utilize on this overall 50-minute reversal trade entry is that you are waiting for a confirmed protected high point. For example, price comes up, sweeps this high point out, and then it breaks the structure to the downside. If it sweeps the high point out and breaks the structure to the downside, you will ultimately have a sweep of the liquidity and the break of the structure to the downside. Sweep of liquidity can also happen at this overall retracement high too, if the previous lower low on the 50-minute time frame breaks. And once it breaks, you will have the reversal opportunity and you will pull the Fibonacci from this high point down to this low point and you will enter on the 71 level. And here's an important thing, that in this case, you are not going to use the minus 0.27, you are only going to target the 0 level. This is the only target point you have, a fixed risk-reward ratio for 2.4. This is the only risk-reward ratio you can gain from these reversal type entries, because targeting below that is dangerous, because you are trading against this higher time frame 4-hour trend, the 4-hour flow, and trading against it is always dangerous. So you want to make sure that you make that money, you take those profits and you leave. One more important thing, that I recommend you to only take maximum one reversal trade right here. So if price, for example, creates another reversal opportunity by sweeping a structure, breaking a low point, I recommend you to only take the first one, because the chance of hitting the TP decreases by every new opportunity. So this is the logic of having reversal trades. Simple, yet could be effective if you learn how to use them, if you master them after you master the first two entry models. And once again, I only recommend this entry model for those who have self-confidence in their system, in themselves, and mastered trading psychology, mastered risk management totally. So once again, really simple system. Price starts the retracement, it has to shift the market structure, then it has to break the structure to the downside. Again, the previous lower low on the 50-minute time frame has to be broken, and obviously you have to apply all the other criteria as well, starting with sweep of liquidity, break of structure, order block, and then volume. And in this case, you can pull the Fibonacci, you can enter on the 71 level, and you can target the 0-1. Now, let's see some live examples in the next video.